Hello everyone, welcome back to Financial News in Palos Heights, and I'm Ron Jankowski with Channel 4, and of course Paul Munichel is with Ameriprise Financial. And Paul, I'll let you take it.
Thanks, Ron. I've got some comments I want to get across to the viewers at home pertaining to everything that's going on with Saudi Arabia over the weekend and how that may affect us.
And you mentioned the weekend, and what we want to mention, today's date is September 16, 2019. So a lot, as Paul is going to be talking about, happened at the end of the week and over the weekend. So Paul.
Thanks, Ron. So, the attacks on Saudi oil infrastructure over the weekend, like Ron said, it offers yet another modest negative hit to global growth prospects. In addition to that, the ongoing trade disputes, of course, particularly with U.S. and China, but also don't forget the ever-pending Brexit exit and lingering uncertainty to the new NAFTA agreement. It's creating a lot of uncertainty. Also, there's been some heightened tensions between Japan and South Korea, all contributed to a notable depressive impact on global growth really over the last year and a half. Now, though the outage in Saudi Arabia, it's likely temporary, its upward lift for crude oil prices is likely to remain, thus boosting inflation and negatively influencing real GDP growth to varying degrees all around the world. Certainly, it's particularly negative for countries that import large quantity of crude priced on the international market, such as China, Japan, and India. So those three countries may have a much bigger impact on this than the U.S. Here in the U.S., economic pressure has also come from production delays from the Boeing due to its 737 MAX problems and what are now labor disputes that we're seeing at General Motors. They're all going to add to a list of pressures over the near term that will impact the markets that we see. But going back to the point of the Saudi oil, Saudi officials have said that they believe about 1/3 of their output from the attacked facility may be restored just in the next few days. However, the negative implications from the attack are likely to linger much, much longer, as the attack's success and relative ease in taking out such a material amount of global supply is clearly a negative development. And some key points on this is the outage from the weekend affects approximately 50% of Saudi production, or approximately 5% though of global production. Now, given the surge in U.S. production over the last 20 years, the U.S. market is not reliant on Saudi supplies, but U.S. oil and gasoline prices should be expected to rise moderately.
Okay, and I want to mention Ameriprise Financial also gave us this last-minute news that we received this morning. The S&P 500 futures are trading 0.3% lower following the weekend attacks on Saudi Arabia oil facilities and lower than expected industrial production data out of China.
That's just kind of proof of the things that I just commented on. There's a lot kind of stacking, a lot of unknowns going on out there, and it will affect the market. Thankfully, it's nothing dramatic yet. A mild downward open is fine given the market we've had this year.
Right, slight correction. The yield on the 10-year Treasury is down, but follows last week's significant backup in yields across the curve.
Now, that's something to note. People that might be looking for reduced mortgage rates or things of that nature, if the Treasury is down and if the Fed continues to cut rates, that may bring yields down even lower.
Which will encourage refinancing.
Possibly.
Markets in Asia closed mixed, Europe trading broadly lower. WTI crude again is the news again this morning, and it's trading 10% higher following the weekend attacks that impacted 5% of global oil supply, as Paul has already mentioned, and nearly 1/2 of the Saudi Arabia's oil production. And I want to mention also the S&P 500 is still a plus 21% year-to-date. The Dow is 18% plus year-to-date. The NASDAQ is a plus 24% year-to-date. Markets are holding, Paul.
Markets are holding. The oil is going to have somewhat of an impact, but as I reported and you reported, it's 5% of global production. So it shouldn't have a major impact on our gas prices, although who knows, you may see them go higher.
All right, very good. Stay with us. We'll be right back with a show called Your Money, and we'll be talking about growth versus value stocks. Something that you may want to listen to. Listen for Paul's comments. We'll be right back. And we're back with Your Money. Thank you for staying with us. And as I mentioned, Paul is going to be talking about growth versus value stocks. And Paul, I'm going to ask you the first question. What does that really mean?
Good question. And it's one that I get a lot because you'll hear about growth and value stocks and people want to know which one may or may not be right for their portfolio. So last week we talked about dividend paying stocks to the viewers that saw that show. Those stocks are typically what we call value stocks. Typically, growth stocks are typically stocks that do not pay a dividend like a value stock would.
So in other words, a value stock would have lots of activity going up and down, possibly?
Well, they both have activity going up and down. See, that's a good question, and people get that. They misunderstand that concept. They think growth stocks are just going to grow and go straight up, and value stocks, but there is activity on both sides, growth and value side. What's more predictable is value stocks have a predictable dividend, which means that their income stream, what they're producing, their profits are more known, versus a growth stock reports earnings, just like a value stock does, but they take all their earnings and they roll it right back into the company looking for growth.
Okay, so what that means is if you're looking for an income, let's say, and you want to invest in a stock for achieving what you're creating your profile for. So then you should be looking at what?
Good question. So yeah, if you're looking for an income-driven investment, you want to look more towards the value stock side because those value stocks do kick off the dividends, that is the income you're looking for. It's not to say value stocks do not grow in value, and that's the big misconception a lot of people have. They'd say, I want my account to grow. Well, value stocks can make your account grow just as growth stocks can. The main difference, and I keep going back to it, the main difference is one pays a dividend, one really doesn't. Other than that, they're pretty similar.
So really, you should have a financial advisor walking you through this to select those particular stocks to achieve your portfolio.
Absolutely, because I'll get clients and customers and prospects, they'll ask, what type of investing is right for me? Well, that answer is different for everyone. The retired individual that wants strictly income, they're going to lean to the value side. But that retired individual may also need growth to keep up with inflation over time.
That's so important, what you just said.
Right, so a custom-built portfolio for each individual is what you need. Going back to that retiree, I don't know, maybe 70% of their portfolio should be value stocks, 30% growth stocks. It's going to be different for everyone. Now that 20-year-old investor that's saving for retirement 30, 40 years from now, it's not to say a value stock isn't right for them either, because value stocks can grow, and you can take those dividends and automatically reinvest them, buy more shares up. So it really is a question that I'm not trying to cop out on, but you have to meet with an advisor and get a custom mix for you.
Now, for the viewers that are wondering, if I get a dividend, can the dividend be mailed to me as a cash check, or is it something that you have to work out with your account that you have with your advisor and reinvest it? Explain a little bit of that.
Yeah, the second half of your question is the right answer. You have to look with the account where the money is. So at Ameriprise, a lot of investors will have the dividend paid to the account, and once it's there, we'll send it directly to their bank. Some investors own the stock directly where they can get a check in the mail directly from the company. And no matter where your money is, if you choose to reinvest it, you don't get a check. It just automatically gets reinvested into buying more shares.
Okay. Well, those are the questions I have. I think the viewers, this is a little complicated. I think the viewer really needs to talk to, unless they really understand the growth versus value, they really need to talk to a financial advisor for guidance on this.
They need to. And the point I just can't emphasize enough is value stocks do grow. It's just don't get confused by the names, because a lot of people, again, will want their account to grow. They think they want growth stocks only, but don't overlook a value stock in that situation, because they can grow just as easily as a growth stock can.
Okay, Paul, is there anything else you want to summarize on this before we close?
No, it's like you said, you need to really talk to your own advisor you have at home, or if you do your own research, just make sure you're open to all different types of investments for your portfolio. It's your money. You have the decision on what you want to do. But if you are looking for, second opinions, always talk to your advisor first. If you don't have an advisor, feel free to call me directly. I do work at Ameriprise Financial, like Ron mentioned, and call me. I'm at 708-226-3412, and I'm happy to help.
All right, thank you, Paul, for bringing that to the investors that are viewing. For Paul Munichel with Ameriprise Financial and myself, Ron Jankowski with Channel 4 in Palos Heights, we wish you good investment day.